This week has been not the most nicest of week. Market hasn't really moved the way I've been expecting it to actually move. Pound, it did drop. I was expecting this drop though, but yesterday I was doing some back tests. That's how come we have all these lines here. I was doing some back tests with my people in the academy. Right, they asked me to back test all the things that I've taught them, so I was just helping them. Yeah, so we did like that YouTube trading view playback thing, and then it made them really see the essence of all the things that I'm showing them. And it was a very good one. So just around here, right, initially my plan was for GBP USD. Oh, I don't know why my pen is misbehaving now. So for GBP USD, I was initially kind of expecting like a more push-up, quite relevant one, and then like a continuation, and then making of that lower low formation, probably up to like this. This low first, right, and then maybe later to like this low or maybe this trend line, but it happened not to have got there anyway. And then it dropped, but this drop right here is actually a lot, if you measure the pips here from here to here, that's literally 125 pips. It's a lot, 120, just one candle, 120 pips. So it can literally do the magic for you for the whole week. You may not necessarily even need like a whole lot of pips if you really got in at the right spot. But that was pretty much what I was looking out for most of the pound pairs. But if you watch GBP card, it actually did what I was actually expecting, which is like expecting it to go hit that previous resistance. It's something that I've talked about like 1,000 times on my Instagram live, but only a few have caught it so far. But the earlier you catch up with it, the better for you. The earlier you catch up with that game that I threw out for free, the better for you. What I usually tell people is that like you're gonna see a move like this, right? So you're gonna see a move like this. So in a move like this, it's very like abrupt, right? When we say something is abrupt, it means that like the market just like went up like this, and then like what's this thing misbehaving? Today I don't know why I feel like using the tablet, but it's disappointing my movement. Let me use the drawing too. Like went up like this and suddenly like reversed like that. When you have a move like that, for the most part, let's say like 95% of the time, right? Look out for these previous highs again. The market is likely to crawl back there before like reversing. It's a price action thing. You cannot compete or fight the market for that behavior. It's human behavior kind of a thing. So I told people, right? I told them in the academy, everywhere, that look, we're going to have a reaction like this. Expect market to pull back up into these highs before like that push down, right? And I always talk about that. If you've been on my analysis before, you realize that it's a usual thing that I say. Who here has heard me say that so many times before? Let me know in the comment section if you've heard me, or this is probably the first time you're ever hearing me talk about somebody saying order block. That's not really order block. That's not that order block concept. This is like the sniper entry price action concept. So it has nothing to do with order block. Says, where is the academy? The academy is in. You just have to go. It's in Accra, Ghana. You just have to Google Kojo Forex Academy. It's in the heart of the city, right in the middle, not very far from the University of Ghana. Yeah, somebody says me every time. But anyway, let's watch what happens. I'm using the play button. So play. My internet is a little bit slow this morning. I don't know why. but right up there, goes there. That's what we're expecting it to do. And then what happens? Taps into it. That tap is very important, right? That's what most people do. And this is where the manipulation is. If you're a beginner and then you don't know anything about the market, that tap right here is where all the magic happens. This is that manipulation candle, right? So that's why sometimes I pity people that use pending orders to identify order block and all those things. One candle is going to take you out. This manipulative candle, which is supposed to grab liquidity on the upside, is going to take you out. It is going to take you out, and then you're going to be in a loss. You're going to be in a loss, and then the market will still go in your direction anyway. So that's how come I don't really like pending orders, because I want to really observe the manipulation in that range and then spare myself of that manipulation. But I was expecting like it should continue trading lower, lower. But I guess maybe we'll just consider this like a retracement, right? So it means that if you're going to consider it as a retracement, then we're going to just have to put like a fib from here to here, like that, Oh, I reversed it. Let me change it. Yeah. So from here to here, like that. And then make sure that like this thing still is stuck within this range here for the meantime. And then that is what would perhaps convince us that we could make that lower low and then start that lower low, lower high structure of this whole formation. You get a picture? I know a lot of you get a picture though. But yeah, if you don't get a picture, that means that you've not been watching my analysis, or you've not been watching my YouTube videos. You should watch my YouTube videos. They're all the games are there. I teach all of these stuff for free. So the whole concept is that we made like a high here, came down, made that equal high. The market has a reason to change direction, and that's what the fact that it couldn't break this equal high right here. So comes down, now has to create a lower high, comes back to break this low right here, which is what is going to determine that indeed the trend has changed, and then the market is likely to now seek to make more lows. It's as simple as that. This is pure concept in play. If you understand this, then you know that this is like pure technical concept. The things that are flooded on YouTube. Everybody now teaches about market structure and all those things. When I started teaching about market structure, not a lot of people even knew that such a thing really even existed in the books of trading. So, I mean, we've set so many pace and legacies in the market for people to come and feel like it's normal. But trust me, we paid huge prices to learn some of these, painful lessons. But you're lucky to have it for free. So I wonder why people would not succeed early in the market. If you're failing, that means that you're not putting in the work, that dedicated time to study. I was sharing some free knowledge with my mentees currently. I was telling them that, like, you guys, you're fortunate that you have me standing right in front of you to be mentoring you and teaching you all the mistakes that I did. But let's put fact into perspective. Lawyers, doctors, pharmacists, physicians, all the big names that we know out there, that they make, like, the big bands, they make 100,000 a year, not a month, a year, 200,000, 250,000, 350,000. They spend like 10 years, 13 years, 15 years of their career, journey before they started earning such an amount of money. So if you are just starting out as a trader with a few, bucks, say $1,000, and just like a tablet, if you even have that, because not a lot of traders even have a tablet. Majority of traders depend on their phone, and then just a few have, like, quote unquote, like some broken laptop doing their own thing, and you still want to succeed, you still want to, like, so that you have to go freaking extra mile before you're going to even match up, if you ever will, and you have all this knowledge. So why not dedicate all the time, all the energy, all the resources, focus on just, like, learning and learning. And trust me, like, you cannot skip that learning. I tell them also that you can make a few bonds, you can make a few gains here and there, but to say a true career, and I gave a very simplistic but accurate depiction of how a lucky person can say Forex is the ish, but they just got lucky. And then I just made it clear that you could have situation where somebody just funds like $1,000. They learn a few tricks from Kojo here and there. They apply it. They over leverage because obviously market has not showed them pepper before, and then boom, that $1,000 actually goes into call it $50,000 or 60,000. Who has not heard that kind of stories before? All of us have definitely heard one or two people doing that type of a thing in the industry. But the brilliant thing is, if only that person has respect, value, and sense enough to value the money, or to put like reasoning on the money they've made, and then be able to do something worthwhile out of that money. If they're able to do something worthwhile out of that money, let's say they're able to like purchase a property, a small property, or they're able to buy some car or start some business, and then like trading is still not even like the real ish is not even going well. Guess what? They're still going to be parading, the flag of Forex trading up high there and tell you that Forex is the ish. Forex changed my life. But they just got lucky. It does not mean that the next 5 years, the next 10 years, the next 20 years, they're going to be stuck on the market and expecting it to pay their bills, But that's not the type of training that I'm trying to give people out here, or the training that I kind of pass on. I'm trying to give that training that is going to actually let people think of this as a career, think of this as what is going to let them have money to get married, have money to purchase the beautiful things they want, have money to go on vacation, have money to support their parents, have money to buy all the cars, have money to pay school fees if they have kids, have money to pay electricity, utility bill, have money to put in their bank account as savings, have money to put out on the side as investments, have money literally for everything, So it's a big step to think that you're going to be. I read something on Twitter briefly, and then somebody was saying that being a full-time trader does not mean that just being sat by the computer 24/7 and thinking that I'm a full-time trader because I'm sitting. It's actually going beyond and being able to like use trading as a means to supplement all the number of things that I've listed, and that's a really big deal, So let me quickly brush through the other currency pairs and then see if we have something worthwhile to watch. Now if I look at GBP CHF, I was kind of expecting it to make this, but I'll now be watching these highs right here, so I might as well just take this one off the chart for now. But let me just see how the market gets to this level, right? For that's GBP CHF. So it means that we still have like some opportunities in the pound pairs to let some things happen. Maybe not today, but definitely next week thereof, we are likely to have patience. Patience is the key. Patience is the king. Patience is the king of trading, right? I was also sharing, you got to follow me on Twitter. If you don't follow me on Twitter, I feel like you're missing a lot, because Twitter is that space that I can share the psychology of the process. I'd use Instagram to be showing the technical aspect, so use my Instagram as that platform that you're going to be learning the technical part of trading, and then Twitter to be the psychological hub, because I tweet a lot of advice there, a lot of psychological patterns, a lot of things to look out for, even though I kind of mix it up with a little bit of Ghanaian politics, African politics here and there, but you can just skip those ones and then focus more on the trading nuggets that are dropped there. So so follow me on Twitter as well. Nothing on GBP JPY. I see a lot of people trying to short it, trying to go long, but that's the frame that I've created for you. So it's actually trading in this kind of a way. This is like, again, another manipulative candle right here. Let you think that let me just go back there. For most people that saw that point as that breakout, and started selling, especially when the market started trading out of that range, guess what? They're definitely going to be trapped. They're definitely going to be trapped in that range, and then you would easily be tempted. Who is here that got tempted with that setup, though? That GBP. I need to change my internet. I'm not feeling this one. What sort of lagging internet is this? Can I borrow your internet? The moment I said, can I borrow your internet, and it came. So what should I do? Should I still borrow it? Is the internet fast?
It's just one bar, surprisingly.
But it's working fine, eh? You wait. When it goes off again, then I'll change my mind. So here, yeah, that's that manipulative range that I was talking about. The moment most people now, it's very easy for a lot of people to be able to spot on, like, chart patterns of the market, because we've talked about it a lot. If you've not watched my chart pattern videos, you're also missing out. So you're going to see something like this and you're thinking, oh, Kojo have talked about this type of a wedge pattern. So this is the breakout. So it's going to actually continue down. Boom, they start selling here, and guess what? Takes them back up there like that. So you really want to be insanely cautious in this market. It's not easy. Nobody should lie to you. It's not easy, but it can always be done. Anyway, let me take a sneak peek at DXY, see what DXY is doing. Anytime I try changing the currency pair, then that slowness begins. But so the DXY has not been friendly this week at all, especially very lagging. The XY has not been particularly friendly at all, in the sense that this is what it has literally done the whole of this week, right? This is what it has literally done the whole of this week. It has not really done as much as you'd expect, If you think that this is anything that could inform your bias on the market, especially in determining what to do with USD, then you got it wrong. The only thing that it could have informed us was saving us right here from not going short on gold, right? Because a lot of people started thinking that last week gold went all the way up, most of the currency pair, because of the CPI. So they were kind of thinking that the reversal was going to up. So people that really factored the XY, just like myself, we don't play with the XY. We kind of were cautious around the reaction that was happening here, and then kind of knew that the XY was so that's shots on gold, and then still lagging, and now I don't really use the XY as a main reference for even determining what will happen with gold anyway, but I use it in reference to see what is going to happen with GBP USD, Euro USD, NZD, and stuff like that. But once in a while you kind of find that part, especially after a key fundamental event like that, so this is all it's doing. We can't really make any much of a meaning out of it, so it has not really informed my trade decisions as much. And this is gold, right? So early Monday, I kind of caught a few pips on gold here, right? Just right from the opening all to here. So that was just about, here's showing 112 pips, but no, I actually caught about 70 or 80 pips thereabout, depending on where I entered, but it was just around that range. And I kind of realized that no, it took a U-turn again, and then I've avoided trading gold till now. But like, I was watching it on was it Wednesday, and then Thursday, just yesterday and Thursday, yesterday and 2 days ago, around these regions. I was really interested in going short here, right? Even though it had no technical reference to it, but I was really interested in kind of going short here, and I would have profited anyway. But I woke up late. That was just about 180 pips, I would have profited quickly with that. That was just yesterday, but I totally missed it. And then, like I said, there was no confluence. So you may wonder, what exactly would then have been the reason for you to look for a short? When I say confluence, it means that when I look to the left side of the chart, which is what most traders need to be doing. If you want to be a good trader, you always need to be watching the left side of the chart, which is like what has happened previously, and then be able to use that. Because if you're not watching the left side of the chart, then you're not doing technical analysis. Maybe you're doing sentimental analysis, or you're doing emotional analysis. I don't even know what word to give you, because technical analysis basically is using historical price to anticipate or predict future price movement of the market. So if you're not using if you're using technical analysis, that simply means that you're watching historical prices. If you're not watching historical prices, then sorry, I don't know what type of analysis you're doing. This is supposed to be on 750. Yeah. So I was expecting gold to also make its low, and then now I don't know what it's doing. Perhaps it just wants to make a little pullback and then start that. But I kind of expect gold to drop. Since it's not dropping as much as we want this week, then perhaps we could have it dropping the way we want next week. There's always another chance for you in the market. So don't ever think that the moves are ever gonna finish or blah blah blah. That's XAU USD. What's the vertical lines for? I'll answer that in another session. Now this is Bitcoin. I'm sure most people have not even spotted this on Bitcoin too, but I'm calling this live. I cannot expect Bitcoin coming to 12,000. I've not made so much macro calls this year because they are all in continuation. But like I see Bitcoin coming to 12,000. So if you're a crypto investor, trader, this may be like a free advice to you. Bitcoin, that's all I can tell or say about it. So it's just like in that calm moment, you know how Bitcoin does its thing. It's always quiet. Then boom, 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 boom. It releases some bombshells, and then people are just running helter skelter. So that's all I see for Bitcoin anyway. That's all I see. How many currencies do you trade? Trade quite a number. Let's go on to oil. Oil did some beautiful magic from the beginning of the week. I think the chart has just been a little bit displayed now, but it did a very beautiful magic from the beginning of this week. And then me and my buddies were really watching it, timing it. So actually started trading it. The pips that oil has done for this week alone, we can start from here and then measure here. That's about 780 pips. So oil has done 780 pips. But, something that I do not underestimate, or will say give less preference to, is the real price action of the market. Nobody can tell me for a fact that if you were in this trade, even from this courage, confidence, wisdom, whatever, to be able to hold it all the way from here, watch the market pull back on them like this, and then watch the market pull back, and then watch the market come down again like that, right? Unless you didn't set a stop loss. And if you didn't set a stop loss, then that means that you're not a trader that I should even be having a conversation with, right? So it means that on a realistic basis, you would have been able to catch that trade from the top here all the way down here, which is also 390 pips. Unless, again, you have a very good reason to jump in after this pullback and then be able to accumulate that continuously. But if you're supposed to be holding a trade from here, you will definitely be taken out by this wick out here. And then why or how would you have got a trade at that region anyway? And then that also comes back to a simple fib rule. So I use fib a lot. If you tend to master fib using, you're gonna really love it. It's one of the most easiest simple price action tool, underestimated by the new school traders who are always hyping the BMW, FVG, WXL, and they are chatting like they always underestimate using simple tools like that. They think that using the most complicated stuffs and then mentioning the most ridiculous terms in the market is what makes others feel like you are wise, you have a lot of wisdom or knowledge on the market. That's actually a damn bad shit. So keep it simple, stupid, right? Have you ever seen that thing? It's called KISS. KISS, right? To succeed in trading, you have to follow the KISS rule. And then the KISS rule is keep it simple, stupid. Keep it simple, stupid, right? So learn to follow the KISS rule. Always keep your stuff very simple, stupid. let it not make sense. The stupid is let it not make sense to people, but you're always the only one that is going to, make money out of it. Let it not make sense to people, but you're only the only one, that is going to make sense out of it and then make money out of it anyway. For US 30, it's been the most trickiest, and then I've actually been particularly avoiding it. Somebody say keep it super simple. I've actually been avoiding trading US 30 for a while now because of like all the confirmations kind of, allows us to risk potentially huge pips, 500 and something pips. It does not make sense unless, of course, I really want to drill down into the lower time frame, which is like the 15 minutes, 1 hour, 30 minutes, and all those things to kind of trade. But that also requires you having the time to sit by the chart and watch the very moment when those things would happen. And that's actually for traders that are actively involved 247 sitting by their chart. But I have a contrarian perspective to people that do that. If you are fighting for time freedom and then you still end up spending your whole time by the charts, then where the hell is the time freedom you're looking for? Then probably just say you're looking for new avenues to make money, but you are definitely not looking for time freedom. You're probably looking for a fast lane to make money or a new avenues to make money from a boring one you had, but you were not looking for time freedom, right? Because people say that, okay, I'm trading because I want to be free. You're trading because you want to be free, but you woke up at 4 a.m. You've been watching the 1 minute, 5 minute chart for like 12, 15 freaking hours. You've not eaten, you've not drank water, you've not even gone to bath. You're just sitting by the chart. Kojo says backtest, some backtesting. You're sitting watching all the candles sticks on the 1 minute, big spike, then you get scared. Hey, what happened? Throwing your emotions here and there, you're not really going to enjoy that time freedom. Time freedom is me, I plug in a trade, I go out to my construction site. I'm just like really in a different plane of work. I'm now watching my workers. Hey, what are you guys doing? I'm not gonna plaster here, straighten here, put this here, bring the roofing sheet, bring this, I'm totally not a trader in that moment. But the moment I leave those construction sites and I get back to the academy, then I wear back my trading suit, and then I start checking the charts and I check the trade that I took in the morning. I'm like, oh wow, what a beautiful trade. I literally just made $1,700. I literally just made $1,800, $2,000. Okay, this is gonna go a long way to fund my project. That is time freaking freedom. That is you being like achieving that's zen mode in trading. At that point, you're a zen in trading. Because like I literally spent just a few hours analyzing the chart and then stepping away from it, putting on my entries, going about, and then came back to see huge profit. I take it, I put my stop loss at break even. I want to see how far the market goes. It doesn't go that way, no problem. I'm going to check back again. But I don't sell my life seated by the chart waiting for heavens to come down. The same thing has been happening with NASDAQ anyway. So NASDAQ US 30, I've kind of boycotted them for a while now, so I'm not going to talk much about them anyway. And then Euro, AUD, Euro, NZD is also been in some very crazy ass consolidation zones, just zigzagging, whipsawing. So I've also avoided trading it. So you see, one thing also that the mistake most people do is that they think that you have to, no matter what, find reasoning in every trading setup at all. So all the time they are looking for a reason to buy something. They are looking for a reason to sell something. Let me tell you the truth. If it doesn't make sense, it's as good as avoiding it. That's the only rule in trading. If the chart does not make sense, it's as good as avoiding it. And that's the only way you're going to really start succeeding very early in the market. So I've avoided trading AUD USD and then NZD USD for a long time now. For a pretty long time, I've just not traded them. But if you have something that works with trading them, then you should trade them anyway. I'm not saying just because I have avoided it, you should also avoid it. because if you have this is something that I would have traded anyway on an intraday basis. So I know that we have people who also see things from that same perspective, but I didn't see it today though, and that would have been probably a beautiful thing. Let me see, about 114 pips. But anyway, I just woke up, so there's no point in crying over spilled milks. Euro USD, I'm sure it's pretty much doing the same behavior as GBP USD. They've been in a tight spot of correlation for a few weeks now, especially after the CPI release. So Euro USD is behaving just like GBP USD. Still reading. Turn on the indicators. Let's see. Oh, these ones are things that I use. The indicators. Let's see. Oh, these ones are things that I used to do, and I just forgot to remove it. I talked about the alligator. Who does not know that I talk about alligator here? So, but I don't use alligator. I cannot even use alligator on there 4 hour. And then this one, I don't even know what it is. I was probably testing something. Now, this is the volume bar, and then this is inside bar candle. But I don't use these things. Like, you cannot make price action finding sniper entries using this. If you're using this, it means they're going to find it. That's why you can only use this on a lower time frame. So for the person whose curiosity was just killing them to find all those things, I hope that your curiosity has been satisfied now. People are just always nosy. They think that you have something going on and all those things. Don't be a nosy ass motherfucker. But yeah, this is Euro USD. I don't have anything to do with it, so it's as good as avoiding it at the moment. Euro card was particularly one thing that I was watching. I took a trade on it. It's still lingering. I'm just kind of expecting it to drop up to this point. Hopefully it does, but my entry was all the way up there, and then it has dropped a little bit. Let me see, just about 50 pips, and then back up there again. So let's see, Euro JPY. How many time frame do you use to do it top down? What type of English is this person speaking? Anyway, long and short is I don't really see much happening in the market. So I'm not really gonna be actively involved in the market today, being Friday, but one way or the other, I'm going to be watching some few stuffs. I just need some. I've helped you people, a lot. I've broken the chart from GBP USD all the way to Euro JPY. That's a lot of work I've done for you. But I need one recommendation from all of you, right? I need one recommendation from all of you. I need you to, it's for your own good anyway. It comes back to you. I need you to tell me the videos that you want to see me. Let's talk about YouTube briefly. The subsequent videos that you guys want to see me shooting on YouTube. What kind of videos are you guys expecting? So let's go to some YouTube topics, right? Let's go to some YouTube topics. Let's talk YouTube now. So you tell me, then I write it. Scalping videos. Then what else? Backtesting. Some people say backtesting. Trading small accounts. If I take your recommendation, I'm going to give you a shout out. Entry point. How to sleep after losing. Nonsense. Prop firm videos. I don't really trade prop firm. How to identify chart patterns. Okay. Chart patterns. Then disadvantage of trading news. Okay. Disadvantage of trading news. Now this one is very suspicious. This topic right here is very suspicious. It means that this person has probably experienced some massive losses in the market, so they really want to understand the disadvantage of trading the news on the market. Let me see. Somebody says trading psychology. So we're going to do more psychology videos. Then the anatomy of chart patterns. The anatomy of candlestick or chart patterns. Okay, you say chart patterns, so I'll do that for you anyway. Chart patterns. But I'll add candlesticks. And let's go to number 9. How to read candlesticks. Okay. How to read candlesticks. My next couple of videos, you guys are gonna love it anyway. Confirmation and confluence. Okay. Confluence. So confluence trading. How to set stop loss correctly. Okay. Market structure, how to better understand it. I think I've done a video on that, but I can do part 2. Market structure reloaded. Somebody says Fibonacci. Maybe Fibonacci reloaded. What? What are we going to eat? I wish you heard the answer I gave. Macroeconomic videos. Okay, we can do some macroeconomic videos. How to be confident in trading. That one is more psychological. Somebody say life of a trader. Okay, I could do some day in a life for you. Day in a life videos. Day in a life videos are really difficult to create. I'm not going to lie to you. How to trade big accounts. Okay. I'll share some secrets with you. Those of them leaving, they are impatient. But I'll share some secrets with you. Those of you staying along. After I finish writing all the suggestions, I'll share some simple secrets with you. It is going to be a freaking game changer. If you're trading a big account or a small account or a medium range account, whatever account size. Money management. Derek, how you doing, my brother? I think that the thing that I'm going to share with you is under the scope of money management. So let me just highlight that briefly. So we're going to learn some very important thing about money management. And then we're going to also talk about some sniper entries. The whole concept about it. Let me see some of the new things that you've suggested. Please, can you trade with latest news. How to read trade fundamental news. Okay. I didn't really want to talk about that, but I may do that. How to trade. How to. Let me just clean it. Oh, what did I do? How to trade fundamentals. How to add on to trades. Okay, that would be also another interesting topic. That was number 20, which is like position sizing. You see, if I was you, I'll be looking at all the topics that people are talking about and then pointing out where my problem really is, and then start even looking for videos on that, so that when I put out the video, all these videos, then it can like go a long way to kind of balance out what you thought about it, how to add on to trades. So I'm going to do a video on how to add I just have to tap this and then it changes. How to add on to trades. And then, or how to scale. Let me just say, or how to scale. Okay. How to load it? How it there? Okay, sure. I'll do that. Because I've been teaching her some few things lately. Now I'll do it. I taught my wife how to trade reloaded. I've been teaching her quite recently a whole lot of stuffs. How to avoid manipulation. Nobody's talking about that, but you should ask me, because there are manipulations in the market. How to avoid manipulations. Let me throw a little bit on that. I'll use a diagrammatic form. Right. So you realize that, you see, the market could be trading downwards like this, right? Then all of a sudden it goes to create like a high like this, right? A whole new high like this. And then now it's just coming down like this, right? Now, you see, 90% of traders are lazy. And then, not traders, humans. 90% of humans are lazy. Humans don't like to think. Humans just like things that come very easy. Now, what that literally just means is that the most easiest way for somebody who's just been told that, oh, this is Forex market, all you have to do is that when you see the market going down like this, then place a sell here, then you're going to profit, right? Or when you see the market going up like this, place a buy, then you are going to profit, right? That's what majority of people like to think, or sort of would say play the game, the life of the easy way out. So what that literally just means is that people are always conditioned to think that, okay, then if that is the easy way out, then it was going down here, then it has possibility of what? Breaking and then going down. And then they just told me that I should place a sell there. So I'm waiting for it to break out, then I'm going to place what? A sell here. That's the scenario one. They are not thinking about reason that could let them jump in the trade from here. And the scenario two is that, oh, the market is like, going up, came down, and then going up again. Oh, so they said if it just goes up, I should place a buy. So they are waiting again here, right? That if the market gets here and then it breaks here, then I'm going to come in and place the buy, right? And then I'm going to actually profit. I'm going to actually profit when this thing should continue up. True or false? Is that not like most? They are also not thinking any reason that is going to allow them to get that trade here. They're also not thinking what is the reason that is actually going to let me jump in that trade from here or jump in on that trade from here. They're only thinking about let it break, let me enter for the buy, or let it break, let me enter for the sell. So now, do you know what this simply means? This means that the people that don't want you to win, because truly there are people who don't want you to win, as bitter as it may sound, are now going to be what? Looking at your human psychological behavior around here or around here. They are now going to be tricking you because they know that that is where your reactive reasoning tells you to take action. And then they don't want you to win. So they are really going to be watching the actions that you're going to be taking here, or the action that you're going to be taking here, right? So guess what happens? I'm not going to clean this one, but I'm going to leave it there and then show you what happens. So what will usually happen is that you have like a market coming down like that, create that high, come back down like this, right? So in essence, because all of you perhaps are waiting, some people have set orders there, right? Some people are just going to set like that, what's the name? Sell stop, right? Sell stop here. So they're going to set a sell stop. And some people are also going to set a buy stop. Some people are also waiting for instant execution. They are seated by the chart. They want to see. So instant execution people are here. Sell stop people are there. Buy stop people are there, right? So guess what? For a level like this or a level like this, the market knows that what? There are a lot of people waiting here. The same time, there are a lot of people waiting here. True or false? You have to be the one to answer that. So how do they let it work out for you? Comes out, comes down, comes down, comes down, gets here, wicks run here, wick runs here, runs here, runs here. You're seeing some full-blown body candle. You think it's going to enter, then boom, it just reverses back up. When it reverses back up, this is the time that I am jumping in for the buy. Takes me up while you are now crying here. Let me draw your crying face. Let me draw it well. With your big head, small hair, big eyes, and then you're crying. Ooh, the market is wicked. Ooh, wicked market. And I'll be smiling here with my cute Chinese eyes, with plenty hair, afro hair, which everybody will be telling me, go and cut your hair, go and cut your hair, go and cut your hair. And I'll be smiling, yee, to the bank. Yee. Then the market just go. And then does the same thing here. Goes up, tricks you in. Oh, it's going up. Oh, they try jumping in, then boom, just reverses. And then that's again where I would decide to come in. And then the same picture is reloaded. This time you cry with red eyes. And then with red teeth, because you'll be so sad you may not even brush your teeth. That's what happens. And I'll be in the trade and then bring me back down here. So in simple sense, how to avoid manipulation is not be that trader that wants to jump in on breakout trades. People are always wanting to trade breakout. They are looking for this. I've just taught you a simple way to avoid that. And then one best way to avoid that is using candlesticks. Watching really understand the anatomy of candlestick. Those little bit of wicks that are going to be occurring there, you avoid them. You just want to stay out of those wicks. It pushes back into your range. You identify some solid confirmations, patterns, whatever it is. Then that's where the party begins. And trust me, the moment you adapt this simple analogy, you are really going to be very successful in trading. If you adapt this very, very simple, straightforward analogy that I've given you here, you're going to be successful. Anyway, thank you guys so much for your suggestion. I've seen all your videos. I'm going to do as you have requested. Shoot a lot of YouTube content for you. And then hopefully those who just took all the lessons, nugget that I threw up there, I hope it just goes a long way to help you as well. And I'm going to save the live video, just some people requesting liquidity, mitigation, balance, institutional candles. I don't really use any of those concepts, but the way in which I trade kind of has, will I say, confluence or reasoning into that same stuff. But it's actually very different. Anyway, I'll see you guys in the next YouTube or in the next Instagram live.